Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como and today is the 8th of September. You may see that I'm in a little bit of a different place today. My partner kicked me out of the office today so she could work. So here I am in the basement, which is probably where grain market analysts belong anyway. All right, let's get into what is happening in markets today. We saw canola up $10.50 today. 627.30 is where it finished up at. Actually, we saw green across most of the board. Minneapolis wheat up 10.75 at 565. Kansas wheat up 12 at 504.5, and Chicago wheat up 4.5 at 519. As the title of this video would suggest, we're suggesting that perhaps there is a bottom happening in the wheat market right now, or at least a temporary bottom. We'll talk a little bit about that in a second. Soybeans were up 6.75 today at 10.27. Corn was up 3.75 today at 4.17. Bean oil was up 24 points at 51.25 per pound. Canadian dollar was relatively unchanged, 72.36. Live cattle down 18 points at 235.88. Feeder cattle up 112 points at 360.50. All right, let's talk a little bit about wheat. Here is December hard red winter wheat. We saw a good day today. As we mentioned earlier, it is kind of pushing up towards the 20-day moving average. Let me just get my trusty laser pointer out here. Here's a 20-day moving average. Here's where we got up to about 518, close to 520 today. So that's kind of pushing where the 20-day moving average is. You can see that through the last few months here that we've been seeing some pushes up above the 20-day moving average, but that hasn't been able to get sustained. What we would like to see in this market is a sustained move and even a full candle above the 20-day moving average. But this is a good sign. December spring wheat, even bigger gains today. Push it up to about 580. That's excellent. We want to see a test of that 20-day moving average. I think that's pretty much a foregone conclusion at this point, which adds a few more points to the December spring wheat. Spring wheat has been suffering significantly, even more so than some of the other ones, as the amount of high protein wheat coming off this year will be high. Canada's yields are expected to be good, and a lot of harvest pressure right now. I think the last USDA report on spring wheat progress was 70 maybe, something like that, percent harvested. So we're right in the gut slot of harvest supplies coming in, and that might be just getting close to ending. We didn't see the same kind of results from the winter wheat or the soft wheat category, but still some gains today. It is trading still near the 20-day moving average, so it hadn't fallen quite as much as the hard wheats had. So similar story here. If we see it move above the 20-day moving average, we would see that as a positive. All right, just from an analytics standpoint, YouTube shows me my analytics every once in a while, and interesting to know that 75% of the folks that are watching this video are not subscribed to this channel. If you like ag content, particularly Canadian ag content, we put out a video every day, or at least pretty much every day. So hit that subscribe button if you haven't already, and I think there's even a bell icon you can hit to get notifications of our new videos as well. We publish them after the close so that we can get a good perception of what's happening in the marketplace. All right, let's get back to wheat here and why we might be seeing at least a temporary bottom. Here's the December Minneapolis Wheat Futures Seasonal Index. As you can see, we're actually past the point where wheat normally bottoms. We normally see the bottom here in spring wheat into the middle of August, and then it kind of rallies through the month of September and then fades off again as we get through November. Sometimes we get a Christmas rally as well, but that isn't shown here necessarily on this December chart. We are right now close to the top of the rally, but again, this might just be delayed because of the yield expectations that were coming out from both Canada and from northern US. So it, as we move through the harvest, it may just be a little bit delayed on the seasonal. Of course, kind of to be cautious here, we do tend to see the prices move up and then fade back out again. So be cautious of that. There's no guarantee on just how far a rally after the bottom will come. So just keep that in mind as you're pricing. Target pricing is always a good idea in this marketplace as well. All right, moving on to canola. We saw a positive day in canola as well. Not necessarily triggering any major technicals in this market, although we did get a bounce on Thursday off the bottom of the channel. That's a good sign. As you can see here, the canola market has also been struggling to stay above the 20-day moving average, but it also has been kind of inside this channel. You can see back here around the 25th of August, even though it didn't close above the 20-day moving average, it still did test the upper bounds of that channel. If we did that today, that would be somewhere, around 645, and declining obviously as we move forward. So we just kind of want to watch the test here of the 20-day moving average. We want to see if we can get a test of the channel. Some counter arguments though is we did see some major crosses here. The 20-day moving average crossed the 200-day, and we saw the 50-day cross the 100-day. Those are both bearish crosses. So we're not necessarily saying that this is runaway bullish at this point. There still is some caution in this market to be aware of. Here's the November seasonal futures index. And interestingly, here we are right close to the bottom of that normal index. So it could be that canola is following the index right to the peak, or right to the key of it. And maybe the bottom that we saw on that channel is the bottom. Again, I want to see some proof. Unfortunately, that proof will be much higher than where current values are. There are ways that you can add exposure, using call options, using bull call spreads, even using long futures contracts if you have your stop loss set in the proper place. So just keep that in mind. Seasonally, this is the bottom for canola markets. One thing that might rattle canola markets and wheat markets tomorrow is the Statistics Canada stocks of principal field crops. This is the end of the crop year, so July 31st supply and demand estimate tables from Statistics Canada. Unlike the USDA, StatsCan doesn't give any forecasts or forward-looking numbers. So this is where all the analysts and all the nerds like myself get to reset their S&D and complain about how inaccurate Statistics Canada is. And then we can move forward from there, at least with some numbers in mind. So this is where we kind of get to fill in the blanks on what Statistics Canada is thinking about the July 31 S&D. So stay tuned for that tomorrow. That comes out at 7:30 a.m. And we send out a notice to all of our premium subscribers. So if you want to be a premium subscriber, there is a link in the description where you can get that done. All right, looking at canola here a little bit from a commitment of traders report, or a managed money report. This is the managed money net position in canola. So as you can see, they've reduced their long position quite considerably from the end of the year when stocks were thought to be really tight. And then as the new crop yields started to come up and up and up, and the estimates started to come up, traders were reducing their exposure in canola. So we're not in a short position yet, so we can't really call it short covering. But as this market has faded, if there are traders that want to, reassume their long position, the risk of doing so based on the amount of contracts in a long position has really decreased. So that might give some incentive for the market to start buying back up, particularly if canola isn't in, a super gluttonous situation from the supply side. We did see some gains in corn today, closed up at near 420. Again, I think, the rally that we've seen since mid-August has been about the yield expectations coming off of what the USDA had originally assessed. If my memory serves me correct, it's 188.1 is what the USDA is estimating. And I think there's a lot of analysts that are actually estimating lower than that. However, there is a big analyst firm, S&P Global, who actually is estimating the crop larger than what the USDA is. They have 189.1 bushels per acre with production at 16.7 billion bushels. This is based on its own surveys. S&P always tells you that they are the best in the business. I don't know if that's true or not. So we can see, I think this will be a good litmus test for that, to see if the USDA will actually report 189.1. I am skeptical myself. I think they will come off of their 188.1, but that's out there in the marketplace. So we thought we would talk about it. Corn is still in a relatively large short position. It has been being decreased since the start of July, but it is still in a short position. So if the USDA, there is a USDA report on Friday, the monthly WASDE report. So if the USDA reports reduced yields, and maybe even more reduced yields than the market is expecting, it may help to rally corn because of the short position, and we might be seeing some short covering rally there. Of course, if S&P Global is right, and we see higher yields than the USDA, I think this market could see some significant weakness. All right, talking about the US dollar today, the US dollar fell today based and extended some losses after Friday's weak U.S. job data that reinforced the Fed's kind of commitment to make a cut in the next meeting this month. It hasn't really affected the Canadian dollar too much. So wasn't sure actually if I should even mention this, but we are kind of seeing the Canadian dollar fade. As I was mentioning, it's down in the low 72 handle at this point in time, but it has been relatively neutral. Crude oil was up today. Maybe that's why we saw some gains in the Canadian dollar. But overall, the U.S. news is not affecting the Canadian dollar, and we were relatively static. But just thought I would mention that. All right, if you want to get more of our information, you can subscribe at canadianagmarkets.com/subscribe. That means you get all of our ad hoc reports, including the Statistics Canada one that's coming out tomorrow morning, and including the USDA WASDE one that will come out on Friday, as well as all of our morning commentaries and all of these videos sent directly to your inbox. So make sure you subscribe and enjoy our content for Canadian ag producers. That's all we have for you today. Thank you for joining us. We will see you again tomorrow.